All right, ladies and gentlemen, I hope you had a wonderful day. I'm trying something out with the audio, so it might sound a little different. And I'm rocking this shirt, bro. Descending the Jets. I feel like he has gotten no love. This sweater is mad comfy, but so I'm glad we got to bring it out. But I have a potential warning for you that I want to talk about, and it is based on what happened here today. So it was another day of little movement. I thought we would move a little bit less. We actually ended down almost 0.5% or almost 0.75% on the S&P. The Dow Jones was down over 1%, and the NASDAQ was only 0.15%. And most of the day, the NASDAQ was green, but here's the thing about today. We had a lot of data that I'm about to go over with you now, but there was one thing that happened in terms of the consumer, and we did not respond how we responded last year. So I'm going to share that with you, and then I really want to talk about something very important, and it's simply the lack of movement in the market, which you probably have already heard, especially if you've been watching all of these watch list videos. So, Chad, we got a lot to talk about. I hope you like the video. We appreciate you if you have, but let's get into it. And I'll see you live, youtube.com/the stock market. You guys remember, I'm going to get you there. That's what I used to do. Okay, am I making it? Okay, anyways. But in the morning, there was a ton of data. We started off with retail sales, and this is where the story starts to begin. And what I'm trying to warn you about is the potential consumer warning. It's actually not even my warning. The simple warning is that we're getting data and earnings from these companies, and it could be changing the picture of the consumer. So these retail sales came out. It was a slight miss on the top end, and then the core number actually beat, and it wasn't big. Nothing was more than like 0.5% movement. But the thing about the retail sales is that this is in nominal terms. So this is just in terms of dollar amount. It does not account for inflation. So what a lot of people have been looking at is that if you account for inflation, the retail sales have actually pretty much not been growing and been declining over the last 2 years. So this is where it gets interesting and kind of feeds into what I'm going to show you here today, because based on what I just told you, if nominal numbers are declining 2 years in a row, that's not a strong consumer. That does not seem as strong. But then again, the yields popped up because that lack of strongness, well, it wasn't weak enough of a consumer to mean that the Fed could start lowering rates. Very, very interesting, but that's where it starts today. Then we had the Fed services. That one was way worse than expected, but it didn't hit a new low. Industrial production was decent. And then the home building index. And then this is a little bit part of the story, but I mean, I'll humor you with global markets and what you deal with now. There was really bad China data. They missed all across the board, but people got excited in the fact of, well, if China's doing worse than expected, maybe they will do stimulus. Again, just like we do here. It's amazing. But again, it's the analysts even from here who say the same thing. But that was part of it. And then I'm going to give you one more, and then we're going to circle back to the final point. I'm not saying like Jen Psaki, but there was also debt ceiling in a bunch of Fed speakers. However, it did not move the bonds or gold. Like I'm saying, the retail sales data had a bigger effect than all of the Fed speakers and anything related to the debt ceiling headlines. That moved bonds today throughout the day more than anything. And even throughout the day, we got like, it was very negative sounding. We have, even on this little drop right here, there was news that Biden was cutting the G7 trip short, and people reacted to that. Then Kevin McCarthy came on after the bell. We had a very exciting after hours, and he said, well, it's not looking good, but then we might get a deal by the end of the week, but then we still might not get anything. Then Biden said he's appointing a team. All of these updates. So it's a little bit of movement of what you heard. Kind of seems like we're in the same place, but here's the funny part. Bonds did not move. The only thing that moved today on a lot of these headlines, either debt ceiling or Fed speakers, it was U.S. equities, the euro, and the pound. They all moved in tandem, but bonds, yen, the gold, anything more of a safe haven, it stayed very stable. That's one thing. If you remember last year, when things were getting very volatile, there would be a high correlation. Everything would move at the same time. Dollar, bonds, everything would move. Everything was correlated in terms of something would happen. Stocks would move. Everything would move with it. We're not seeing that right now. The correlation is actually lower. So there's all of that. I want you to keep this in mind, and I'll even give you now a debt ceiling update. My base case, we're almost 2 weeks out. I think the Treasury now has $55 billion left. my base case is not that they come to an agreement, or at least it's not that they raise it. And I don't think the base case is a default. My base case right now is that they agree to some sort of pause or extension and suspension for another 1 to 3 months if this really comes down to the wire. And then if the markets don't puke beforehand, they should be able to accomplish that. Or maybe the markets start to puke and then they respond. So that's my base case now. But again, I'm giving you the update. This is all the data, and it's a little quick summary of the day. But now this is where I'm coming down to the potential consumer warning. It was Home Depot. They had their worst earnings apparently in 20 years. They guided down from an already lower guidance to 5% yearly or comparable sales there. It just really wasn't good. Again, some of their slowest growth here in 20 years. The interesting part, the stock was down like 5.5%. And then by the end of the day, it bounced up, closed around like 1.5 to 1.75. But this is the big thing now, because last May, I know a lot of you remember it. We talked about it. Just, it wasn't too long ago. These companies like Walmart, Target, I don't know if Home Depot was a part of it, but they were buying ships because of the supply chain crisis, and they were buying ships just to guarantee inventory. And then by May 2022, they're like, yeah, we got way too much inventory, and marking down. Again, all of this is, even analysts talked about it, all of this is embedded into everything they got going on there. So this is the consumer freakout we saw last year. You had the first sign of it with HD. Again, we've had a lot of earnings already, and it didn't really show that. Again, even Apple didn't show that. People were more, I guess, maybe AI clouded some of the bigger tech stocks, but that was the first sign. And now we have Target in the morning tomorrow. We got Walmart, TJX is in the morning as well too. And just keep your eyes out for it, because like we've said, we have not really moved. The market has barely been moving, and maybe now, because my expectation is that we're probably going to move Powell on Friday, then after the expiration, but depending on what we get with these consumer earnings, Target, Walmart, TJX, if they all kind of show the same warning as HD there, I want to see if we get that consumer freak out, and that's really going to be the key. So, like I'm saying, I think everything is going to be moving after Powell. This is what I'd be watching in the short term on the week now. Otherwise, if we get to the end of the week, if Powell moves us or not, I think after expiration we start moving, and ironically enough, it leads into 2 weeks exactly till we run out of money for the debt ceiling, and then we find out what happens from there. And the thing about it, I forgot to mention this, why the debt ceiling and the timing is so important. Biden's about to go to Japan, and then I believe in the next week or so, either sooner or later, there's going to be a recess in Congress where they will not be in session. So there's not a deal or a pause. You know, that next 2 weeks, that's the timeline, at least from 2011, when things started to really react and freak out. And that's a playbook a lot of people are following. So we are going to see, but now let me finish it with this last point. Let's talk about why the market's not moving. We're going to see what happens after expiration. But I think that sell in May is very, very real right now, and I would not expect the markets to do anything. Again, I was not expecting much today. It moved a little bit more. I mean, 0.5% close on the SPY. I will take it. That's, again, it's just to the lows of yesterday, but still, again, the daily chart, everything, it looks really, really messy. But what I'm kind of saying here and what I'm expecting is that I don't expect the markets to do anything till at least June in the next Fed meeting. Again, I'm waiting to get a narrative here, but borderline, it's all about buying time, like I've told you guys a lot about. But watch June, maybe September, not only just the yield curve, but the thing is, we're getting this economic data. You're watching certain things react and not really. Again, it's like the data's not good, but then everyone's comparing it to the backdrop of the Fed cutting or not cutting, and it's creating this weird thing. But if we keep doing that for a couple of months and come into June or September, then the reasons for why there would be a pause, even if the pause idea, is running off of little confirmation, and we really even haven't had a pause yet. Again, the last meeting was a raise, but even then, the whole idea is if we keep playing this, well, respond to the data at face value, but then compare it to the backdrop of what the Fed is going to do to get the sentiment. That's what we've been doing back and forth all day, whether you like it or not. If that keeps happening and we fail to get much movement or real clarity moving forward by September-ish or even June-ish, and the data starts coinciding with why the Fed paused, then what that's saying is, what I'm telling you is, by then, all of the data will start crashing down, and then the market will have to react at that point. It's not going to be what you're seeing now, because everyone's like, wait, why is nothing happening? Because again, people are comparing it to the backdrop of the Fed. There's certain data's, going down. But what I'm saying is that you can get excited about a pause in the short term, but then if you start to see the reasons why you paused come about, if inflation doesn't come down, or again, the reason why Powell did it, that means they're probably expecting some tightening in the future. If the markets hold up and then 3-6 months from now, we start to see that evidence, that may be the only thing that can move us, especially as we have to deal with May and leading into summer. So hopefully you can interpret that, and we said it here today. Bearish, bullish. I mean, I am a uber bull no matter what, because what you own tells how you feel. And I have a long-term, I'm fully invested in stuff. But like I'm saying, we've been talking about some of these theories, and I'm just trying to address the fact that the market is frozen, like Elsa right now. We're barely moving. And the whole point is, what will make us move? You had 7 Fed speakers today, and bonds and gold and yen, and nothing moved, right? And it's like, why are you moving on retail data? And how is the retail data bad, but not bad enough for the Fed? And again, you're playing this back and forth. So I'm trying to look for what can make us move. And it seems like the only thing was like real pause data, or the pause showing up in the data, and whether that's through job losses too, that's part of what I'm saying. That's that final shoe to drop, and depending on how the markets move till then, that's pretty much what we're waiting for. So get ready for the rest of 2023, Chad, but that is everything. That is your watch list. I did play a play on gold. I got clapped on it. I might add another, but it's coming into next week. That's it. I closed my bond short. I might want to add to it. I want to see what happens with the debt ceiling, but pretty much coming into next week, it's already going to be Wednesday. Depending on what happens, I think before we know it, it's just simple Powell. Then next week with the debt ceiling, and then we see what happens, and maybe we get surprised here with the consumers. But bonds and gold going back and forth. I covered note for small gain today. I got like ZEVN yesterday. That was a hype AI play. That one didn't work out. And I think that's it. Our Baidu came back up, and pretty much bonds, gold, Fed future plays working, and that's it. Just wait. And I'm expecting to do nothing. So, again, we're trading bonds and gold. So that should say a lot to you. I don't know. We'll see. But Chatadonia, that is your watch list, ladies and gentlemen. I can't get any closer. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, there's a difference between civilian life and service life. You can play, everybody gets to play the game. You don't get to make the rules, but you got to follow the rules to get the prize. But if you plant, and if you actually work hard and plant, the farmer deserves the first of the fruit, baby. Just think about that for a second. Just think about everything that was just said. And that's it, Chad. I love you. Drink that water. Stay hydrated. You already know. I'll see you in the morning. And get ready. Let's have some fun. Again, even if the market's boring, I'm sure we can have some fun. Again, I got to move around. We got a lot to talk about. I was about to relax. I was about to pull the chair back out. That's it. I'm talking into the mic. So I'm recording on 2 mics today. I wanted to see how it sounded. So it's like pretty much my voice is echoing. It's like 50 Josses in the background. So I'm not even being awkward. I'm just telling you what's going on here today. And I'm mad I didn't wear this sweater more, bro. This is like, it's mad comfy. And then I don't know why I'm trying to flex in it, but I still look pretty yoked. Okay, I'm going to leave now. Okay, I made it awkward. Okay, horn.